Assalamu alaikum. My name is Mohammed Naman. I'm representing Habibi Coin. I'm just going to conduct an interview with Brother Tanveer Ahmed. Assalamu alaikum, Brother Tanveer. How are you?
Wa alaikum salam. Alhamdulillah, yourself?
Not too bad, alhamdulillah. I'm just going to ask you a few questions on interest-based mortgages. Do you or yourself or someone you know have an interest-based mortgage?
Excuse me. Yeah, myself, I actually have an interest-only mortgage.
Interest-only mortgage. What is the rough amount that you borrowed from the bank?
Roughly, it was about £162,400.
£162,400. Right. Okay. Right. And how long have you had this mortgage?
11 years. We began in 2007.
It began in 2007. What month, may I ask?
September.
September. Right. Okay. And how much were you paying monthly from September?
Yeah, so basically between 2007 to 2009 we were paying roughly about £766, and because of the recession, I think the Bank of England brought down their interest rates, so because of that always coincides with our mortgage product, so our payments came down to £365 a month.
365.
This is rough calculation.
So for 2 years you paid £766.51. That's what you just told me. I wrote this down. Yeah, right. But in order for us to get some accurate calculations, obviously to help give our community information, right? I'm just going to calculate this very quickly. 1 second. For 2 years you paid £766.51. Yeah. So basically, you have paid £18,396.24. You have paid for the first 2 years. That's just the first 2 years, yeah?
That's correct, yes.
Right. Okay. 18,096. Right. Okay. And thereafter, you're paying £365. Sorry.
The exact figure was £364.49.
Okay. 364.49. Okay. Right. So you paid that up until now. Right. Okay. The average mortgage lifespan is 25 to 30 years. So obviously, typically that's 80% interest and 20% principal over the initial years. Obviously, we worked out how much you paid so far in the first 2 years, and you're paying £364.49. You said up until now. Right. We're just having a conversation here right now. Yeah. Just say you didn't have to pay interest, on where would you rather spend your money? Just give me 3 things where you would rather spend your money.
Yeah, so 3 things I would say. Like the first and foremost, which is probably a standard answer, I'd probably take my parents to Hajj and Umrah. In fact, not just my parents, all my family, all of them, because alhamdulillah, I've got a big family, so all of them. Okay. Secondly, most likely would also be a renovation to the house. Thirdly would be probably most likely to invest in sort of a business or something. And probably fourthly buy new glasses or something.
Yeah. Alright, okay. Yeah. Right. So obviously between having your mortgage for the whole 35 years, obviously you've had it from 2007 up until now, that's like 11 years. Yeah. A lot of people go through mental stress, and it emotionally affects them, affects their their health, physically, because they have that constant worry about sheltering their family, so if you were to give me a number between 1 and 10, well, obviously 10 being really high and 1 being very low, what number would that be on the just mental stress to begin with?
Yeah, I would say in terms of that, I would say 10, because of the uncertainty, and also we're just paying money for nothing, to be honest with you. If you're looking from like a sort of an Islamic perspective or a Muslim perspective or anything, you've obviously fair enough, it is what it is, but we're still just paying interest, and that's it from the amount borrowed. And obviously it's like a never-ending story. Basically, you're just paying and paying and paying money, and then it's not really impacting on the thing you've actually purchased.
That's mental stress. So did you said 10 for that? Yeah.
Oh yeah, definitely.
What about affecting you, emotionally on a daily, weekly, or monthly basis?
Emotionally, I would say there's two aspects to it. One, obviously, as I mentioned, connects to the previous answer, paying for nothing, and then it just gets to a point where why are we doing this in the first place? Secondly, most importantly, is the fact that we're just paying interest. Interest, obviously, and for me, and I'm sure I can speak up for others, is like one of the most really one of the deadliest, not the deadliest, one of the worst sins that someone could do is give or take interest. So in that sense, it does make you feel emotionally sort of drained why we were doing this in the first place and stuff.
Right. Okay. And obviously, thirdly, sometimes it does affect people physically, and it affects their health. Because they're concerned about their families. So, what number would you put to that from 1 to 10?
Physically, I would say, because I'm still young, alhamdulillah, so obviously I've still got fuel in the tank, so I can keep going. But the thing is, because, well, first of all, I would say about 7 or 8, the highest 7 or 8. But the thing is, it's like, as I mentioned, we were working towards paying a payment each month, which obviously is going nowhere. Obviously, it is interest, it is what it is, but it's not really kind of helping us in any way. It's just paying off something that that is extra. Now, again, this obviously connects to the Bank of England's interest rate. If they wanted, they could increase it, and if they increased it, then that's just going to impact on our monthly payments. So it's going to get even more worse for us.
Right. Okay. Right. So far, basically, let's just get this together. Let's do a bit of mathematics here. £162, £662,400 is what you actually borrowed from the bank. And upfront, did you pay upfront deposit for the house?
Yeah, I did. It was 70,000. It's between 60 to 70,000. I don't know the exact amount, but it's between 60 to 70,000.
So you paid 70,000 upfront for the house, but just say including fees, basically. That's what you're saying, yeah? Right. Okay. I'm gonna quickly do it now. So 100, 200, and just a 233,000 pounds. The house was worth, basically, yeah. 230, you say, yeah, roughly, yeah. So your house value was 230 pound, and you borrowed 162,400, and on top of that, just says 70k that you give up from, yeah. So interest over the years, just say just call it 65 pound, round it up, yeah. Over 35-year period, you will be paying £115,000 in interest alone. You will be paying. That is a huge figure. That is a huge figure. So you will be paying £115,000 over the 35 years of your mortgage. Did you know that?
Well, I did have some sort of indication in the back of my mind, but obviously I didn't know the exact amount.
Then again, I've only calculated not the first amount that you paid, not the £766 you paid. I've calculated it with the £365 monthly payments over the 35 years. I've not done the calculation. It would work out more. That was just a rough estimate that I've given you there, right?
Yeah.
But did you know that you'd be paying that much interest?
As I mentioned, that it was in the back of my mind, but it wasn't really like to that point where I knew that this was going to happen. However, obviously, just to add to that, I feel as if like it could increase as well, and also I don't think it's going to decrease, but it will definitely increase
the interest rate we're talking about here.
Yeah, the interest rate, because of, as I mentioned, the Bank of England's interest rate could increase any time. But I mean, it's bizarre, to be honest, to kind of think of those numbers. But for me, my intention is like not to get propelled to that stage. Hopefully, inshallah. Obviously, I'm trying to push forward and try and clear this before then. Get out of the situation. So yeah,
okay. You paid 70,000 up front, and the 162,000 is what you borrowed, and plus the 115. That works to £347,000. So the initial value of the house would have been what, 230 plus.
Yeah.
230 plus. And but then you paid 347. That's what you'll be paying in the end.
Mm.
Right. Okay. That's a lot of money. That. Right. So now, if you had a mortgage, but there was no interest on that mortgage product, right? Your home equity was protected. You would never have to forfeit, or go through foreclosure from the bank. Would this be something that would interest you?
Of course, definitely. I mean, any way to get out of interest, I would obviously, I wouldn't bat an eyelid.
Right. Okay. So, what if personally you couldn't be accepted, for the program? Would you still support it? Helping with the families out, on their interest-based mortgages. It's just like a better community solution. Would you like support it still? Yeah.
Yeah, without a shadow of a doubt, because obviously you are aware that if you help someone out, and at the end of the last month, inshallah helps us out as well. So yeah, definitely, 100%.
Right. So, okay. At Habibi Coin, right? We focus on doing just that, and our core mission is to improve the economic burdens of our community by tackling issues and areas that most people do not give enough attention to. But we can't do that without your help. So I want to thank you for your time, Brother Mead. This little bit data will help our community around the world to understand how bad interest-based mortgages are, and how much some people are roughly paying, and how much they could save, and what they could have spent their money on. Once again, brother, I really do appreciate your time that you took out to conduct this interview with me. Thank you again.
You're welcome. Take care of yourself.
Okay,